Hello, this is Doug Gerlach from my iClub and ICLUBcentral. Welcome to our 2025 edition of Preparing Your Investment Club's Tax Returns. Tonight, we're going to take a look at the process of filing your federal IRS tax return for your investment club, as well as a brief summary of state requirements and filing your state returns using the My iClub Club Tax state version. Joining me tonight is Russell Malley, who is our club accounting advisor, and Sean Pulrang, who's our senior support representative, and Treva Dildine is also in the back office answering your questions. If you do have any questions, please type them into the handouts box in the GoToWebinar application, and you'll also find a copy of the handout for tonight's presentation in the handouts tab, and hot off the press, copies of our user guides for the Club Tax Federal and Club Tax State. We do have some release announcements. We are actively engaged in finalizing some of the forms. And so I expect that those user guides are going to be revised, have some tweaks and edits, but we did want to get the first version out. So those are accessible right now in the handouts tab. So you can get a copy of that and start to brush up on all the tasks that you need to complete your club taxes. So the purpose of the webinar is to review the federal tax filing requirements. We'll demonstrate the club tax program that we make for my iClub, and Sean will wrap up by summarizing the state tax filing requirements. And we've got some good news on the releases, so there's plenty to come. Now, of course, we are not tax professionals. We've been doing this for 30 years, practically within the company, generating tax forms for investment clubs, but the responsibility for the accuracy of returns does remain with you and your treasurer. We provide a lot of tips, a lot of guidance, a lot of recommendations for reconciliation, for keeping track of transactions, for good practices, and the bottom line, you want to make sure that your returns are accurate and timely. So keep that in mind as we go through the presentation. So let's talk about the status of the 2025 My iClub Club Tax, and I'm happy to report that our federal version has been approved by the IRS as an authorized e-filing provider. So we're happy to have that release out there. It is available on My iClub. We have had clubs that have successfully filed their returns already. Now, most clubs won't have their 1099s and other details for a couple more weeks, but as soon as you're ready, you've got the documentation that Club Tax Federal is available for you to utilize. As of the 15th of January, the IRS was accepting partnership returns. You can order Club Tax directly from the My iClub website. You can call us online. If you order from the taxes tab, that will ensure that the correct club record is attached to your club tax purchase. So we always like to suggest that. You will need to log in order that we can help you with the right version of club tax that you is best served for your club. Here's just a reminder of what the store looks like for the club tax purchase. We've got our federal deluxe and our federal basic and our club tax state basic versions. We've also got our IRS extension request e-filing service available for you to purchase, and there are separate versions for disbanding clubs as we introduced last year. So we ask you to log in, and that way we'll help you figure out if you can use the deluxe version or the basic version. We're migrating more and more users over to the deluxe version for more support and functionality. The couple of things that are new for 2025, one of the big ones is that the IRS has eased requirements for filing Schedule K2 and K3. This is good news. Last year, there were more exemptions for these two schedules that are used to report foreign income. And this year, there's another set of exceptions that the IRS has introduced. So that's good news for most investment clubs. As I mentioned, Club Tax Federal Deluxe is required for more of our large investment clubs and those with complicated transactions. If you've got a lot of members, a lot of transactions, complicated transactions, problematic securities, then you will be directed to Club Tax Federal Deluxe. And then the final version is also available for disbanding clubs. So you want to keep that in mind. If you disbanded at year end, you'll want to use that version, the final version. Many clubs can use Club Tax Basic, especially smaller clubs, newer clubs, clubs that don't need a whole lot of support. If you're following our best practice recommendations, if you're staying away from problematic securities, then Club Tax Basic will work out pretty well for you. But those larger clubs with complex transactions, clubs with $1 million in assets will need to use the Club Tax Deluxe add-on. We're defining Club Tax Deluxe. This is not the same as the IRS recommendations or requirements for some of the additional functionality, but those clubs would be incorporated in our requirements for the Club Tax Deluxe program. So if you have 30 or more partners, if you have an asset value at any time in the year exceeding $1 million, if you have 250 or more security transactions in the year, that includes buy, sells, distributions, and reinvestments. If you have any wash sale transactions, those are problematic for us on the support side, and a lot of times it's just kind of carelessness on the part of the treasurer and the club that trigger those wash sale transactions and generate disallowed losses and have to make massive adjustments to your records. And so those we wanted to try to continue to steer clubs away from those wash sale transactions. If you own problematic securities that issue K1, such as royalty trusts, limited partnerships, master limited partnerships, those are problematic as well. If you must file or elect to file Schedules L, M1, or M2, or M3, those are all included only in Club Tax Deluxe. So you would need to use that version of the program. So is your club larger? When you log into the Club Tax store, you will see, after you select your club, you will see the little note here that says that it appears your club is not large and may use Club Tax Basic, or is large and must use the Deluxe add-on. Now this is not absolute, and it may be that there are other transactions that as you get into the Club Tax program itself, or if you call for support for problematic security transactions, you will be directed to that Club Tax add-on. This is our way of trying to keep the cost of tax preparation low for as many clubs as possible. Even saying that, I do want to point out that the least expensive online alternative for partnership tax preparation that you can find from the major tax e-filing providers will run you $700 or more. CPAs and tax preparers for an investing partnership are likely to charge closer to $1,500 to $2,000. So our $99 and $139 programs are a real bargain in the tax preparation space for investing partnerships, and we're committed to continuing to make those affordable. And so this is part of our strategy to share the costs equitably amongst many different kinds of clubs. The IRS will allow any taxpayer, including partnerships, to apply for an automatic 6-month extension. You do that using IRS Form 7004. We have a service that will let you submit an e-file that report, and it will cost you less than printing it and mailing it via certified or registered mail with return receipt. So $13, it's a real bargain. We'll give you near immediate confirmation that the IRS has received that extension request, and so you can purchase that from the Club Tax store. And we are an approved provider. So if there's any question at all, your broker says, oh, your 1099s are going to be delayed, we're probably not going to get them towards the end of February, and you're worried about whether or not you can generate your IRS return by the deadline this year, which is March 16th, then we suggest you go ahead, spend the $13, get the extension, and even if you file on March 18th, you would be late otherwise and subject to thousands of dollars in penalties, but with that extension request, you will be in good stead with the IRS, and there will not be any problem with filing after the March 16th deadline. So keep that in mind, keep it in your pocket. It is a solution, it works. Again, it's priced equitably online. Other services that offer this, it's closer to $20. It's more, if you're mailing certified or registered mail, will be in excess of $20. So for $13, it's great for peace of mind. So we want to encourage you to take advantage of that service if it comes to it. Now, I mentioned we also have a separate version of Club Tax for disbanding clubs. So that is really key. If you find that you bought the wrong version, we can switch you over. Our support team will do that. But in order to finalize your investment partnership with the IRS, you've got to file a final return by the 15th day of the third month following your disbanding. You don't wait until the next tax year. You need to do it. So if you decide you're going to terminate your club in March of this year, you're going to have to file your 2025 return by March 16th, and then your 2026 short year final return will have to be filed by the third month. So April, May, June, the 15th day, so June 15th. So you don't wait until next year. That would be considered late by the IRS and subject to penalties. So the final version will help you to file that final return with the IRS. We have complete instructions for disbanding, so check them out. And we also have a webinar on that topic that you can view if you are coming up against this particular challenge. All right, let's take a look here at some of the questions. Sandra says, what's a wash sale transaction? A wash sale is a situation where you sell a security and then at a loss. So you have a capital loss from the sale of that security, and within 30 days of the sale, either before or after, you purchase additional shares of the same security or a very similar security, according to the IRS. And so if you do that, make that transaction part of your capital loss is disallowed. So you have to wait at least 30 days before you repurchase the security. Often this comes from clubs that don't follow our recommendation against using dividend reinvestment, and they purchase, get a receipt, they sell the stock, then within a couple of weeks they get a dividend and it's reinvested. That's a purchase, and now you've got to make a massive adjustment to your records to disallow part of the loss, and so that's called a wash sale. Best to avoid it. Hey Russell, do you have some additional?
No, you cover it pretty well. There's
all right.
Just please don't do a lot of them. You add a whole lot of work for me because I'm the one who does support for wash sales.
All right. Well, we're going to turn it over to you now, Russell, for some facts about filing partnership tax returns.
Okay. All right. First thing you know, all partnerships have to file a federal tax return. Some of you may have heard years ago that there are some exemptions for that, but those type of partnerships do not apply to better investing style partnerships. So if you're an investing partnership, you're going to have to file. Okay, and that means if you're in existence during any part of a tax year, you have to file. Even if it's only for a month or two, you still have to file. Even if you just span during a tax year, if any time during the tax year you were a club, you still have to file with the IRS. That includes whether you had really no transactions, gains, purchases, or anything like that. the IRS still wants to hear from you. These are informational returns, so by filing, they get the information they want. And there are really significant penalties for late submissions and non-filing. It's like, last I looked, I haven't checked this year's penalty, but last year's like $220 per month per partner. So it adds up really great. We've had clubs coming in with, almost tens of thousands of dollars in penalties because they had a lot of members and they didn't file on time. So file on time, it's really important. Okay, so how do you prepare the tax forms? It's really easy. You can use the club tax for both federal and state. We cover 16 states. And our tax preparation software is approved by the tax agencies in all the states where we offer state tax preparation software. Doug covered where you can order it online at My iClub, or you can call the support staff at the number you see. So when is the tax printer released? Well, it's released as we're approved. So it may vary from year to year, and you can't use prior year forms with some few exceptions, but you still need to file. Though states and IRS release official forms for the upcoming tax year anywhere from starting in November, and then even make changes through February. So that means you may have draft forms after you purchase and you try and generate your tax forms in My iClub. It may say draft, there'll be a watermark. It's a draft. You cannot file using the draft forms, but once they are released and approved by the state, they will be automatically updated. So you can just double check and make sure the draft form watermark is removed, and you should be able to be approved and ready to file once you do that. Okay. Expect things to vary from state to state. We're having problems with some state, and with the IRS and the government shutdown, things are running a little late for some states, so be patient. As soon as there's at least one state that hasn't even started e-filing test cases, so be patient. We are working on it, and as soon as we can get it done. So for the IRS filing, we're authorized to be an e-filing provider by the IRS. There's no additional charge for e-filing, and you do get confirmation, which you can use to show proof that you had timely filing. We've had several clubs have to use that when the IRS said, you were late, here's your penalty, and now they can use that confirmation that it was e-filed to prove that it was filed in time and not have to pay. It's also good practice to either make a PDF copy or print and save a copy of the return for the club's records. So let's go on now for the deadlines for partners, the filing deadlines. Okay, for the IRS, this year, the filing deadline is March 16th. It usually would have been the 15th, but that's a Sunday this year, so it's moved over to the next business day. And these deadlines used to be later in April, but they changed them to March several years ago. This helps individuals who are in the club and other partnerships to get their partnership information before their personal tax deadlines in April. And the other deadline is you have to provide all of your partners with the K1 by the March 16th deadline, and also, if applicable, the K3 for a partner. And we'll cover K3s a little bit. Okay, so you may not be getting information from your brokers. They usually should be giving them around, they're by law supposed to get them to you by about February 16th. It's quite often brokerage firms are a little late, and they may also issue a corrected 1099 even as late as March. I've seen some like a week before filing deadline, they come out with a an amended, a corrected 1099. Actually, one of my clubs received a corrected one after the deadline, so we had to file an amended return. And this year, as Doug said, we do have an e-file extension, so you can use the extension and e-file it. So if you have any doubt that you're gonna make that March 16 deadline, file for the automatic 3-month extension. There is no penalty for filing for an extension and then filing on time, but there is certainly a large penalty if you don't file on time. So if in doubt, file for an extension, it won't hurt. Okay, so here's a nice brief schedule for what type of tax documents you may get and when they are supposed to be delivered. So by January 31st, you should get 1099 div, 1099 interest, 1099 miscellaneous, and the 1099 OID, or original issue discount. This is for bonds. The 1099B for brokerage firms should be delivered by about February 16th. Often brokerages will put it online first before they try and mail it out. So, and then if you own a partnership, one of those publicly traded partnerships, a limited partnership or master limited partnerships, you're going to need a K1 from that partnership, and they don't have to deliver it to you until March 16th, which is one reason we recommend you don't own publicly traded partnerships. You may not get the information you need in time to file your club's returns and may always have to file an extension. Okay, for disbanding clubs, there is a separate deadline. It is the 15th day of the 3rd month following your termination. And as far as the IRS is concerned, termination means when you have less than 2 members in the club. You can't keep one person and say you're still a club as a partnership, because the definition of a partnership is 2 or more people doing business together. So take that into consideration. The club final club tax, federal and state, can be used and should be used for this last final return. It may use, depending on the time of year when it does, it may use the previous year's forms. Do not wait to file until next year, because that could be greater than the 15th day of the 3rd month after you terminate, and you will be liable for the penalties. So again, don't do that. Most states have the same requirements, that you file by the 15th day of the 3rd month, maybe a few the 15th day of the 4th month. So check with your state to make sure which one of those is. And there is an exception. A lot of states require you to e-file those, and we found Wisconsin requires partnerships to e-file their regular returns, but they won't accept e-filed partial year final returns. So you're going to have to contact My iClub for support and get guidance on how to file a final year return for Wisconsin. Okay, and remember, disbanding can take several months, so plan ahead. It's oftentimes people get dividends, or after they think they've disbanded, and that causes problems. It gives them income after they've disbanded, and they have to figure out what to do with it. So plan ahead, make sure you have everything lined up and you know what you're going to be doing before you're going to be fully dissolved. That's like making sure you know when your dividends are going to be coming in, and you're not going to be dealing with those coming in. You might drop, if a dividend comes in, where does it go? Who gets tied? Who gets the actual money? You know, clubs use different things. It goes to the people who got the shares if they were transferred, or it's a little bonus for the treasurer. They get to keep it. So decide on that in advance. The IRS has some rules. If the next year's tax forms are available by the deadline of your after you dissolve, you should use the next year's tax form. So if you're filing late in the year, it might be a good idea to file an extension to make sure you can use those final forms, because IRS is going to want them. And if you have questions, we have a nice link to an FAQ about this topic. Okay, now what are you doing getting ready to file? You want to get your accounts and your transactions ready. So there are some things that we do not support. Foreign partners are not supported, and this is non-US citizens who do not are not resident aliens, which means they have a green card. So US citizens and green card holders, resident aliens, we support those. If you have a partner who does not fit that, resides in a foreign country and they are a foreign citizen, you have to withhold taxes. We don't support the withholding forms for foreign partners. So be careful about that. And there are some securities that give problems for clubs. They may not be problems for individual accounts, but they make extra work and can delay filing the club's tax returns. So if you have some of these, you may have to be using the Club Tax Deluxe. And here are the ones that can cause problems. Trading in cryptocurrencies, equity options, real estate investment trusts. We'll get to those, but you have to edit some transactions to figure out what the actual distributions, the nature of each distributions that were recorded as dividends when they're not really completely dividends. Business development companies, special purpose acquisition companies, gold, precious metals, anything that's considered as a commodity, or ETFs that hold those commodities as their major asset. There are special rules for those on the capital gains. Then royalty trusts, and then publicly traded partnerships of any kind, limited partnerships, master limited partnerships. That's because of the K1 requirement, which you may not get in time to file the club's returns, so you'll be filing for extensions. Okay. All right, some things to do before you begin generating your tax returns. Make sure you have all of your 1099s from all of your financial institutions. Sometimes they will have extra information on them. I know REITs, that's the tax treatment of distributions paid by REITs. Normally they're classified as dividends when you receive them during the year, but at the end of the year, you can go to their website or wait for your 1099, which often breaks down the distribution by the different types of distributions that were considered dividends, but now you're going to get the true nature of them. Okay, so you're going to have to be making those adjustments before you allocate income, because dividends are treated differently than capital gains and return of capital, which could be those REIT distributions. Well, this is important. Make sure the club's official mailing address is current with the IRS. And usually that means the same address you used the year before. If you change the address from the year before, you're required to submit a change of address form, which is form 8822B. And that's before you file your return. So now usually with the 1099s not coming before February 16th, it's probably likely that you won't be able to get all the information and can't file before February 17th. Okay, so you want to complete all the tasks in closing the books. And fortunately, we have on the YouTube channel, the Closing the Investment Club's books for 2025 by our wonderful leader, Doug. And you can see it's on the YouTube channel, and there's the address there on the bottom of the page for that one. And you should consider doing your annual audit during this time. And again, there's another nice one on conducting the annual investment club audit by Doug on the ICLUBcentral YouTube channel. Okay, so there are some things you also need to be absolutely sure about. And that's to have the country and security type correct for all of your securities in its security information page, okay? Don't assume they're all US companies or common stocks, right? By default, when you enter a ticker symbol, it's going to say that it's a US company, but it may not be, so double check with that. You can use the quote feature in My iClub and put in the ticker symbol, and you want to look at where it's domiciled. That's usually where it's the country where it is incorporated, and that's the country that the IRS wants information from. If you don't have the proper country, you may not, if you have paid foreign taxes, you may not be able to get the credit because the tax printer won't know that that tax was paid foreign taxes. You know, it doesn't have a foreign country to associate with that foreign tax, so it may not get added into your foreign tax paid. That's not good for you. You have to pay more taxes. Go through your records, make sure you've entered all of your 2025 transactions. Any transactions, you don't want them on your last valuation date, the 12/31 date. So if you have any dated 12/31, edit those and make them, enter them as 12/30. And there are some mutual funds that pay dividends in January. They would have paid dividends in January 2026, but they are taxable in 2025. So treat them as if you received them on 12/30/2025. And additional information and details are in the Closing the Books webinar. Okay, well, you can deal with some of the headache securities. Probably the easiest one is REITs, but the easiest thing for your treasurer and the less trouble is to avoid those problem securities. Okay, so when received, the broker statement is going to say this distribution is a dividend and it's going to be entered as a dividend. However, they get reclassified and they tell you what they really were. There could be ordinary dividends, qualified dividends. If it's a REIT, non-qualified dividends are called Section 199A dividends. So you have to distinguish between those types. You can be told that there are different types of long-term capital gains, regular long-term capital gains, unrecaptured Section 1250 gains. So you want to add all of those capital gains types and enter them as capital gains distributions. And there will be a step later in the allocation process where you will differentiate between the different types of dividends and different types of gains. Right? As we said before, that information can come from the company website and often is on Form 1099. I know when my club owned some REITs, it showed each distribution date and the dollar amount for each type of distribution. So it made it very easy. You didn't have to do calculations. But if you want to get it done earlier, go to the company website, but you will have to do more calculations on your own. So once you've reclassified all of those REIT dividends into their proper types, you do have to run the allocation of income and expenses again, so that new information is included in the allocation to all of the members. So here's how you do that. You find the security in the list of securities for the year, and then you click on it and you get the transactions page, and you can see it was entered as a dividend. And then you can look, you see that add another distribution type to this transaction. You would click on that. Right, and then when you do that, you go to the company page, and you can see all of the different distribution types and how much it was, what the total was, and then the dollar amount per share. This is per share value. That's why you have to do the calculations. Then you have to figure out the amounts and then enter the, for each distribution type, you have to click that link for add a distribution type in the security transaction page. And then once you have that information, you start entering it after you make the calculations. So this is an example of some of the calculations, how many shares you had, different types of each one. So you can set up a spreadsheet to make it easier for you. So you see there's different types of capital gains. So you want to do the total of capital gains as one transaction, and then let the allocation of income and expenses do the differentiation between the different types of dividends and capital gains. We'll see that in a few minutes. Okay, and that's just showing where that link is. Add another distribution type. So for each distribution type, you just click on that and enter the amount, and you just click on it again until you have enough distribution types to cover all of the types that are listed on your 1099 or on the company's website. Okay, oh, it's showing. All right. Once you've done that, you can enter your end of year valuation, 12/31/25. This isn't brought up, but the benchmark report, so that you can follow how well you're doing to a benchmark, uses that 12/31 year-end thing to do the beginning and ending parts of your benchmark and your club's cash flow. So it works better if you have a valuation date, and so that's another reason to make sure you put that end of year valuation. Now, if you have a regular monthly valuation for your December meeting, this is in addition to that one. So, okay. So once you have all that done, you allocate the income and expenses. And every time if you make any more changes to the actual data amounts or reclassify some type of transaction, you should redo that allocation so that information is included in the allocation used for the tax preparation. And you can redo that allocation as many times as necessary. It will just overwrite. So when you do that, if you have any security classified as other, you will get this screen. And this is where you do the differentiate between the different types of dividends and different types of capital gains. And you just enter the qualifying dividends amounts. These happen to be REITs for this one. It gives you the total amount of dividends for each one or capital gains that were entered. And then you just enter for, in one column, the qualifying dividend that was from the company website or the 1099. And then the tax program will differentiate between them and report them on the proper lines once you put all of this information in. Okay, now a really important thing to make sure your tax returns are not as long as they need to be. So some of these, we'll talk about the K2 and K3. Now, these two forms report foreign income earned by the partnership. The K2 is the total amount from the partnership, and the K3 is one for each member. They're reporting their share of foreign income. Now, these forms are quite long. The K2 is about 20 pages long itself, and then the K3 is 20 pages plus for each partner. So the first year this came out, the exemption criteria were very vague and changed 3 times from the time before filing. From the time filing was available to the time filing deadline, the IRS changed those criteria 3 times. As a result, a lot of clubs just didn't try to opt out, and they had total tax returns in the hundreds of pages. I think the longest one was 900, 1,000 pages. So if you can opt out, especially if you're going to need to file by paper, you definitely want to opt out or use our e-filing. But there are some rules that allow clubs to opt out for the current year, and they've actually been relaxed a bit, or expanded. So there's now a new domestic small entity exception for K2 and K3, and that's just to release the burden for smaller partnerships who really generally don't have a whole lot of international tax data. And from last year, there are certain there's another way to get to the exemption, which was from last year and years before. You can opt out if you met certain conditions. And the first one is you had limited or no foreign activity, and that generally meant you had total receipts for the tax year were less than $250,000. And for investment partnership, that means receipts means total proceeds from a sale, not just the gain. Your total assets on cost basis were not greater than $1 million. You file K1s with the return, and the members get them by the time you file the return. And the partnership is not filing or required to file Schedule M3. Those are the limited. Well, that looks. There are some other. Well, these are a little mixed up. Okay, so you can do it if you meet the things for a small partnership. Total receipts less than 250,000, total assets were not greater than $1 million, and you filed K1s, and you're not filing Schedule M3. M3 is only required if you have assets over $10 million, so most clubs wouldn't do that. Okay, now then there are the other requirements to exempt, and that's you have limited or no foreign activity. Generally, that means you had less than $300 in foreign tax withheld. You also have limits on who can be a partner. So they have to be a U.S. resident or resident alien, U.S. citizen or resident alien, a domestic trust or domestic, it says, no foreign estates or trusts or foreign individuals. And you have to notify partners that you're going to exclude the K3, you're filing for that. And no partner can request a K3 within a month of the club filing, not within the deadline for filing, but when the club actually files. And if someone does request it, the club can just provide a K3 only to that member, so, and not have to file with for all of the other members. Okay, we do have a mechanism to notify all the partners that you are planning to opt out of the K2, K3. And if anyone wants a K1, then they can try and inform the treasurer that they want a K1. But this one also gives notice, and it saves the notice so you have proof that you have contacted the members and notified them that you are planning to opt out of filing the K2 and K3s. Now, that's not the only way you can do it. You can send an email yourself, but it does give confirmation, so you have proof of contacting members. So, questions?
Hey, Russell, great job. One question was what is meant by total receipts?
Total receipts for an investment club will mean the total proceeds from all sales, any dividends, interest. It does not include capital contributions. So member deposits won't count.
And any sort of investment income would count?
Yes, except you get the addition of, for a sale, income is only the capital gain or loss.
Right.
But for this, for receipts, it would include the total proceeds from the sale, not just the gain. So if you made a sale of, you sold $50,000, you received $50,000 in the sale, the whole $50,000 would count. Say you made $10,000 on it. A gain, not the gain of $10,000 wouldn't be counted, but the total proceeds of $50,000 would count it for receipts.
Okay. Is there a My iClub report that shows total receipts? I don't think we have one. Do you know? This is an IRS definition. It's not really, it's just, you know, a different kind of accounting.
Yeah, and it's just for these forms too. So yeah, I think you can go to the sold securities, go for the total year, and I think it gives the receipts, total receipts from the sale, and I think it does give a total at the end. I'm trying to visualize that report in my head. If it doesn't, it'd be easy to total them up for you, you know, because it gives them the total proceeds from each sale. And I think it gives the
Okay.
total for all sales. I just can't visualize the totals in my head right at the moment.
Sharon asks, how do you know if a distribution made in 2026 is taxable in 2025?
It will show up on your 1099. It will say taxable in 2025.
Very good. All
Or
right, thank you.
it might say
Yeah,
taxable in previous year, but something
right.
like that.
Got it. All right, thank you. I'm going to now take over, and we're going to take a look at generating your 2025 federal tax return using My iClub. First of all, as I mentioned, we did release our first version of the Club Tax user guides for federal and state. Those have a lot of great information in them. And details that we can't cover in the webinar. We always suggest that you give those a perusal before you start preparing your club tax returns, especially if it's your first time. The using club tax, of course, it must be purchased. It must be purchased every year, as we've covered. We do provide all of the forms and schedules for the IRS and for states for investing partnerships. The process is similar from year to year, but there are often changes like this year. We're always trying to improve the product as well. So we make adjustments there. So it's always useful to watch the webinar, read the user guide each year. It's something you, as a treasurer, may only do once a year. And so you probably won't remember what you did last year, and that's why we're trying to provide a little extra support for you as you're going through the process. So preparing a return, we're going to demonstrate using the return, the club tax federal for a general, to generate a federal return. We're going to use the most common answers throughout. Obviously, it's your responsibility for making sure the answers are accurate. They may not match exactly every response to every question in this demonstration. We always recommend that you regenerate your allocation of income and expenses prior to generating tax returns, especially. It is required if you changed any data. If you found an error, if you missed a transaction and you entered that, you would definitely want to regenerate that allocation of income and expenses. We covered that in our Closing the Books presentation. That you can watch that review of. You can do as many practice runs of club tax as you want. Nothing is going to get submitted to the IRS until you explicitly say, e-file this return. So you have the ability to generate the return, download a PDF of the return data, check it out, review it. If you have any questions, let us know. And then once you're completely satisfied, you can return to the tool, go through the process, and submit your e-filed IRS return. So keep that in mind. Don't stress out. Nothing is you can't make a mistake that you can't fix up to that point where you're generating the return, and you're not going to accidentally e-file the return. You've got to go through a step where you've got to provide a signature, generate a PIN, and so that final submission will come whenever you're ready to do. We do recommend that you don't wait until March 15th or March 16th in case something goes wrong, and then you need to reach out to us. So keep that in mind as well. The pre-filing checklist that we've prepared, and this gets longer and longer, want you to take a look at this taxes page for any status and updates there. Make sure you have all of your 1099s from your banks and brokers, financial institutions. You've reconciled all the transactions, you've closed the books, you have all your member social security numbers and the member entity types, if they're trusts or individuals or custodial accounts. Make sure that those are all set correctly in My iClub member profiles. We have our Closing the Books and annual audit webinars that you can watch on YouTube. And a little tip, you can adjust the speed, the playback speed, and speed them up if you need to. You can pause them if you want more information and rewind. So those are great resources no matter what your learning style is. Make sure that you understand the opt-out of Schedule K2 and K3. If that's eligible, we recommend that you do opt out. So make sure you understand that. The user guides are available. And if you have changed the address, your brokerage firm, which would be, quote, what IRS calls responsible party, you want to notify the IRS by mail using Form 8822B. A lot of tasks there, but this will help ensure that your process goes through quickly. On the Taxes tab in My iClub, you'll see the modules and versions that you have purchased. So we're going to go ahead and click on the Go button next to the federal product, and you'll see a little introductory page here. You'll be able to generate a full year return. That's what you want. There's help in the drop down. Click that Generate the Club's Returns to start the question and answer program. Make sure that your club name matches what is on your brokerage account and hopefully what's on your original employer identification number application that you sent to the IRS. So that is very important. If there's any discrepancies there, that can cause your or abbreviations that can cause your return to get rejected if you're e-filing. Double check that club tax ID. That should not be any member's social security number, but it goes without saying, this is really important. Often we've seen clubs that had a typo in their club tax ID number that caused the IRS to say, we didn't get your return. There's no return for your tax ID number, and then levy fines, and you've got to wiggle out of them. The address should be the same address. You should have a uniform address for your club documents, for your brokerage and bank accounts, and that you use with the IRS. Again, if it's all the same, the IRS likes that. They don't like it when it changes up every year. When you're moving around, and so that can create obstacles in accepting your returns. And your return generally would be a domestic general partnership. That means a US-based general partnership. If you're a limited liability company, you can also utilize the club tax application. Just make sure to identify yourself as an LLC on this screen. From the IRS perspective, LLCs are treated the same as general partnerships. The first question on the Q&A wizard here relates to family clubs or clubs that have family members in them. So the IRS wants to know if you or the people that you're related to in your club, if any single one of them owns more than 50% of the partnership's assets. So if you have any brothers or sisters, parents, grandparents, grandchildren, spouses in your club, you should probably go through this worksheet. The IRS defines this, defines the relationships of what we call constructive ownership, those rules. So the family includes lineal descendants or ancestors, siblings, doesn't include aunts, uncles, nephews, nieces, or in-laws, as you'll see on the next slide here. The club has any family members, we suggest that you use the worksheet, and if you have to report any ownership above 50%, then there's an additional Schedule B1 that is completed. So if you go ahead and click yes on the survey, you'll get a list of all your club members. Each one of them has another list of everyone else in the club. You select the members that are related in that lineal way. And then if any single one of these members has an ownership value above 50%, then Schedule B1 is triggered. So this is the easiest way to figure it out. If you tried to sit down and figure out whose ownership percentages exceeded 50%, just doing it in a spreadsheet or on paper, be kind of complicated. But this uses the values at the end of the year and is meant to streamline that process. Once you're finished with that, you'll go on to answer some more questions. Is it a publicly traded partnership? You're not publicly traded. You don't trade on a stock exchange. We don't support that. Do you meet all of the following conditions? If you do satisfy all of them, that your total receipts for the tax year were less than $250,000. Your total assets, based on cost basis, were less than $1 million. You're providing K1s to your partners, and you're not required to file Schedule M3. So most clubs would answer yes to that. If any one of those would be, the answer would be no, then you would answer no, and we'll generate those additional forms for you. During the tax year, did you have any debt that was canceled? Chances are very good that that would not be the case. At any time, did you distribute to a partner a tenancy in common or other undivided interest in partnership property? Again, not a transaction that we support, so the answer would be no there. At any time during the calendar year, did the partnership have an interest in or signature or authority over a financial account in a foreign country? So again, if that is the case, that you do have a brokerage account or a bank account outside the United States, you would have to report it here. If you own ADRs or foreign stocks, those are not considered having an interest or signature or other authority over a financial account, and so the answer would be no. If you the next one is has to deal with U.S. Persons with respect to foreign disregarded entities. Again, if you're not dealing with individuals and accounts outside the United States, you can leave that one blank as well. Then we scroll down, and if you have any foreign partners so designated, these are people who do not have a social security number, do not have a green card resident status in the United States, then you would have to report those separately here. So on the return, you may not e-file. We don't support foreign partners, so we're exclusively in the United States. And so you would attach the number of those additional forms if you were filing on paper, and that was the case. So after that, you can scroll down, and you will be able to set your mailing address. And this is important to select appropriate IRS center, even if you're e-filing, and it's an odd thing, but the IRS requires you to set your IRS mailing address, your IRS center that processes your returns, based on your location and size according to this table. So just confirm that the correct location, Ogden or Kansas City, is selected here, even if you're planning on e-filing. Our next section has to do with reporting the cost basis. We've been doing this now for many, many years. So the IRS is receiving information on the securities that you sold at your broker, and is reporting to them the capital gains or losses that you generated in your account. But because these transactions didn't start getting tracked until 2010, 2011, it may be that an established club may have securities that you purchased before that, and your broker doesn't know the basis, or securities that were transferred in didn't include the basis in the transfer, and so you might need to correct records there. So for each security that it was sold in the year, you need to identify the basis as it's reported by the broker. If it is not reported by the broker, if it's a non-covered security, or the basis is 0 on the 1099, or if you didn't receive a 1099 for the sale, which would be unlikely for most brokers. So you've got to have that information. My iClub will provide it. You'll match it to your 1099. Now, many times, as we scroll down, your security transactions, your sales will be grouped together. So you have, 2 or more lots that you purchased, and your broker will only report one detail. It'll have the gain for both lots on one line and one date. One sale date. So if that's the case, you can group them together. So all of the transactions, the securities that you sold in the year are listed here. You can start group, so click that, and then you would select the lots that your broker includes, and then you would enter the basis by the broker, reported by the broker on the 1099 for that security. Once you've entered this, you can imagine if we didn't follow our recommendations and you were reinvesting dividends, and you were doing that for 20 or 30 years, you would have 80 different tax lots perhaps. And if you had to, without this grouping functionality, you would have to identify each one of them individually. And after you typed in the basis that was reported on the 1099, and if you didn't save it, you'd have to redo that work. So save the work. This one is a sale of 2 lots of Walgreens, so not a whole lot to worry about, but for more complex transactions, save it, and that way when you come back to it later, you can it'll pick it right up and have that information, so you don't have to re-enter it. Now, the basis information may not match. Your My iClub may not match your broker, and it doesn't mean that My iClub is wrong, doesn't mean that the treasurer made a mistake. There are a number of cases in which brokers don't have the basis of the securities that were sold in your account. So equity lots purchased prior to 2010, DRIPs, ETFs, mutual funds purchased prior to 2011, security lots were transferred into the account. If you have mergers, acquisitions, spin-offs, the IRS doesn't tell taxpayers how to calculate the basis on the shares that were spun off or acquired. So they merely say there are a number of different ways that you can do it, and the company may provide instructions for one way. It may not be the only way. It may not be, the brokerage may not use the way that we would recommend that you use based on the company's details. And so in that case, the basis would be different. It wouldn't match the broker. Again, don't worry about it. As long as you can back up the basis calculations in My iClub, and if you're a good record keeper, that's not a problem. All you need to do is enter that value. We'll generate Form 8949 for you. That's optional in many cases, but we'll provide it. There's no problem with submitting it to the IRS, even if you don't need to. Form 8949 reconciles any differences in the basis. And again, we're not talking about tens of millions of dollars of differences from the average investment club. And so it's merely for the IRS. And if they want to flag it and come back and ask for more detail, then you can provide it. So don't sweat it. If any of those cases that I detailed are true for you, just follow the instructions and your return will be fine. As we continue down the Q&A, the next question has to do with the centralized partnership audit regime. This is an IRS, one of those great IRS programs that says that if the IRS has a problem with underpayment of taxes or penalties that are due, that instead of coming to the members of the partnership at the time the penalty was assessed or the underpayment was triggered, they can come to the current partnership now and demand restitution. The problem with that is that in an investment club, the members 10 years ago may not be the same members today. So if you don't opt out of this audit regime, then current members could be liable for what happened 10 years ago, 15 years ago. Well, it wouldn't be that long ago, but 6 or 7 years ago, according to the IRS's, their statute of limitations. So it could be possible that new members of your club could have to ante up funds to cover that penalty situation. So we suggest that you opt out of the audit regime. If you're not opting out, you've got to provide this partnership representative, but otherwise opt out and answer yes to that question. Next up is this is related to Schedule K2 and K3, and again, we're working on these details to make them a little clearer, because in light of the new small partnership exception that came into went into effect for the 2025 tax year. So we think that most clubs are going to be able to opt out of it. So you would click no if you are unable to opt out because you have too much foreign tax withholding or foreign tax income, or all of your members want the Schedule K3, then you would answer yes here. And again, Michael has a question about the question of assets over $1 million based on cost basis, which is kind of an odd thing. When we talk about assets, we usually think about current assets. Why doesn't the IRS just call it cost basis instead of total assets? And the short answer to that, without getting into the weeds too deeply, is that partnership law and partnership tax law is based on property. In investment partnerships, are owners of property. Their investments are considered property more so than investments. And so if you imagine you had a building with a cost basis of $1 million and a current appraisal value of $10 million, because you held it for a long time, that doesn't mean you have all the cash to pay taxes on $10 million of appraised value, so to speak. So the IRS is looking at investing partnerships from the perspective of property owners, not investors. If that's just a little side note why that is the case. It's just one of those, when you understand how the evolution of tax law with respect to investing partnerships, then it becomes a little clearer. But we agree that it's very complicated for an investing partnership to use terms like asset value that doesn't refer to the current value of the portfolio. Anyway, with that side note, we'll come back to Bob says, should most small clubs opt out and select yes? And yes, so you should opt out if you can. If you think about it, the IRS isn't going to opt you into things that are advantageous to you. They're going to make you opt out of the things that are advantageous to them. So for by and large, when there's an opt-out possibility, we say, yeah, take advantage of it. All right, let's keep going through. Click the continue button. You've generated your return now. The next step will allow you to show the report. So go ahead and click that, and you'll be able to see the federal return. You'll see at the note there's an e-filing status that says it's not yet submitted. There's a little envelope icon at the top where the treasurer can send an email message to every member of the club saying, come get your K1, it's available now, just log in and download it. Important to recognize that this page looks differently for members than it does for you as treasurers and administrators. Treasurers and administrators of your club, anyone with those privileges, can see everything. They can see all of the entire tax return. Members can see their K1. They don't see anyone else's K1. They can see the entire tax return, but they don't see every other member's K1s or personal information in those tax returns. So that's why it's divided up like this and why this page is organized like this. But the first one is where it says click here for your personal forms. So that's the information that you need for your personal return, your K1, K3 if it's been generated, the instruction sheet and the code sheet for the K1 are there. As you scroll down on the next slide, you'll see the additional views for the treasurer. Click here for the club's main form and related schedules, and then click here for the club's main form related schedules, including the individual forms and schedules. That's the version that's used for paper filing. The one above is every member of your club can see the tax return without that personal information. And then down below, there is a drop-down list of all of the members of the club. That is where if you've got one or two members who are not online in the club, you can download a single PDF with that member's K1 and then put it in the mail to them, hand it off to them at a meeting, or even email it to them. And then down below, it's been cut off on the screen, I think, there's a link to download every member's K1s as a PDF. And then you can share them if you wanted, if you're that kind of treasurer who's going to print everyone's K1s and bring them to a club meeting, that's the option that you'd use for that. Withdrawn members don't have access to the website, so they can't get their K1. Make sure you deliver their K1s in an alternative way. And if you need to, so we suggest you get that PDF, you print it out, or review it on screen. If it looks good, you can go ahead and e-file it or mail it. If you need to go back, click the regenerate button here, and that will take you back to the start. You'll step to the Q&A again. Your saved responses will be there, and you'll be able to regenerate and go through the process once again. When you're ready to then, click the e-file button at the very bottom, and that will send it off to the IRS after you complete a couple of more screens. As always, verify, validate all the figures on the return. If you are mailing the return, print it, sign it, send it via UPS, registered or certified mail with return receipt requested. It's a pricey option, but this is the only way the IRS will accept proof that your return was submitted. If you're save the PDF, we're going to archive the PDF in your club website as well for your records. So the filing and distributing your K1s to partners, we want to reiterate that it's we want to keep it as simple as possible for you, the treasurer. So here is a checklist of what gets sent to who and where, and what is provided to partners, their K1s and their K3 if applicable. We like you to maintain your sanity, so instead of printing these for the members, you can have them log in and download their own K1 and or K3 from the taxes tab once you've finalized the return. So take that opportunity to make the job easier as you can. As you work on e-filing the return as you're ready, we are a authorized e-filing provider. You'll see on the next slide here for investment partnership returns. We've been doing it for a number of years now. So this is a very, this is a very complex situation as we go through every year, but that means that we can submit your return on an e-file basis. The advantage is you get your confirmation number right away, and that will provide the receipt. And as Russell pointed out, we have had clubs that have e-filed and the IRS came back and said, we can't file, you didn't file a return. When you provide that submission number, it clears it up. So that is good to go. As we continue to scroll through here, I do want to reiterate, I hate to see people filing at 8 p.m. on March 16th, the filing deadline, and then see something going wrong when the IRS rejects the submission. The IRS servers get busy as you get closer to March 16th, and so If you file the return on March 16th and it's not accepted by the IRS, then your return is technically late. So we suggest don't wait until that last weekend to file your return. Get it done well before the 16th as quickly as you can. As I will point out, so let's go through the process of e-filing now. So you return to the Taxes tab, go to the federal printer, scroll down, click the e-file button after you've confirmed and you're ready to go. Make sure the club name is entered correctly without abbreviations. So you can see in this case, we're flagging the club name. The IRS does not want any punctuation or symbols in any of the fields. No dollar signs, no number signs, no commas, no periods, no dashes. So just letters and numbers here. And so in this case, it's being flagged and that would need to be adjusted. Make sure the details are right, the address is right. We're gonna give you these little alerts throughout and you're gonna go, really? But this is what the IRS wants. Make sure to enter the details of the partner preparing the return. Their social security number is required as well, their email address if there are any issues. You've got to set the e-filing PIN. You create it, just 5 digits, numbers only. You type it in twice and you're good to go. And then there's a little signature. We have to have your signature on file to authorize it. So use the little box to draw in your signature. Don't worry if it's a little rough. This is just proof that you were here and you did it. Now, the next screen, you're going to confirm all the details, name, address, the tax ID number for all of the partners. When you're done, at the bottom, click continue, and then you'll go on to the, you'll be ready to e-file the return. So when you've come this far, click the button and you'll get a message that looks like this. Your return's being e-filed, is being submitted to the IRS. You can wait. Sometimes it takes a couple of minutes. Sometimes it takes 30 seconds. Sometimes it takes a couple of hours, depending on the IRS server schedule. They do go down for maintenance periodically. If that happens, they sit in our queue, and when the server's back up, we send them back out and file them on your behalf. So if you can leave this page, you can come back at any point, log in. So let's say you come back, and the next time you come, it'll have the submission status at the top. So it says submitted, but not yet confirmed. So that means that it's been sent to the IRS. We haven't received confirmation from the IRS yet, but it's still pending. Then hopefully come back again and you'll see a message that says e-file is complete, e-file status submitted and confirmed, and that submission ID is there, date and time. This is the important stuff. If you want to print this out, you can, but we're going to save it in your My iClub account, and that means your e-filed return has been accepted. So a lot easier than go to the post office, a lot easier than printing a lot of pages for sure. So it's a great deal for your treasurers and your club. And so from there, we're going to go ahead and turn it over to Sean, who is going to talk about a little bit about the state tax returns.
Doug, we've had several people say this is not from you. They've been having audio problems. It's probably on their side. Just want to remind people, this is being recorded and will be posted to the ICLUBcentral YouTube channel. So if you're having some problems, you will be able to get it then.
Great. Thanks, Russell. All right, Sean, we'll leave it to you.
Thanks very much. So as Doug mentioned, we're going to dive a little bit into the state tax returns. Getting the states are being kind of a handful this year. So I kind of want to start off, give a quick once over there that there are 27 states we're aware of that do require clubs to file a tax returns, and this was checked just a little while ago before getting, well, I should say while we were getting ready for the show. So you can see some of the states there are in bold, some are not. The bold states are the ones that we are working on preparing the tax forms for. So you get your Arizona, California, Colorado. Not going to read all of them. the states that are not in bold, unfortunately, that means that for one reason or another, we do not have tax software available for those states. So again, as Russell just mentioned, this will be up on the YouTube page a little bit later, so I'm not going to pause here too long. Just be aware that if you're not 100% certain, the right answer is always check with the Department of Revenue to see if you're required to file. Now we do have also, there are a handful of states that require clubs to file, not necessarily based on whether the club is incorporated in the state, but whether the club has any members who live in the particular state. So there's a handful here. So Georgia, Indiana, Missouri, New Jersey, New York, Oregon, Pennsylvania, West Virginia has the asterisk there. That is the only one of the states that with this requirement that we do not have tax software for, but just be careful there if your club, for example, if your club is based in New York and you've got members in New Jersey and Pennsylvania, you are going to be filing 3 different states worth of tax returns there. So just something to keep in mind as you're figuring out what you're going to need to have ready there to get your taxes all taken care of. So now we want to do a quick, again, a quick brief overview here. So it's been long enough now, I don't remember when, but the IRS obviously used to require these forms to be done by April, switched a few years ago to March. Several states have switched along with the Fed. You'll see that on the left-hand side. There are still, however, multiple states that are using the more traditional or maybe a little more old-fashioned, the April 15th date. I think, as Doug mentioned, in the same way that we don't want to see clubs filing, at 8:59 the day before the taxes are due, strongly suggest that even for the states like Colorado, Maryland, Massachusetts that might technically be due April 15th, we do really encourage that you don't wait around. If you've filed the federal already, you might as well go ahead and file the state as soon as you know the federal has been accepted. So we've got a list here continuing. These are states that again, we don't support or don't have tax software for. So again, there's a little bit of a split there, whether they're due in March or April. But again, we suggest just to check and make sure with your Department of Revenue. And once again, get those done early, as early as you can there. So our status here, we've currently got 11 states approved, released, or pending release there. So we're pretty proud of these here. We've got Arizona, California, Iowa. I'm not going to read the whole list there, but again, multiple states are ready and are available or will be available by the time you read this. I think of the list of states that are approved, Maryland is the only one that might not actually be right on the list there. They came in fairly late in the day, so I don't know if they've been sent live yet, but they certainly should be within a couple of days. That leaves a couple of states pending, Colorado, Georgia, Indiana, New Jersey, and New York. Some of those, I think as Russell mentioned earlier, some of them are running a little late this year, a little late starting the testing process. So we're hoping to get those done, obviously, as soon as possible. Definitely keep an eye on the myiclub.com, where we'll be posting, or I should say updating, what states are live and available as we get them. So as I was saying there, the release is going to depend largely on the state's testing and approval process. So we are working on this every day. We check in, we double check with the states, make sure that they're still working, that we're still somewhere in the queue. If they can tell us where we are, we really appreciate that. I can't say this too much. I don't want to yell it, but definitely, as it says at the bottom, as much as you might want to, suggest please don't call, don't jam up the lines. Check the website. That will be updated. Even myself, I won't know more than a couple hours sometimes before something is going to go live. So in general, we are getting these approved, and we are then turning around in the same day at this time of year and putting them out live. So you will know very shortly after we do when the states are ready to go. So we're going to talk about there's an increasing number of states that are either making available or very heavily pushing for e-filing over the years. So as the laws change, we do have to do work to get the tax software up to date to provide the e-filing in accordance with the rules and regulations for the various states. As I said, some states will mandate e-filing, some are still making it as an option. So regardless of that, if e-filing is available, it will be no extra charge. You will have the option just to e-file, similar to the federal. You'll finish the preparation, and it'll just be a button there. There are some particulars for clubs in California and New Jersey that we want you to make you be aware of there. This is a case where we're not going to derail the whole show. I do strongly suggest if your club is in California or New Jersey, you should take a look at that myiclub.com/state_warning.aspx. Just give that a good read. Make sure you're up to date on requirements if you're in one of those two states. So on generating the club state tax returns, this is very similar to the federal return. You'll see, I think we don't even necessarily have a screenshot. It would take up probably a lot to replicate the dozen or so different screens that are all probably about 90% similar. What we do want to say, though, is that for the e-file states, you do have to do the federal return first, and the federal does also need to be e-filed. So you can't get your state done first and then federal. You can't do the federal and print it out. It does have to be federal, e-filed, and also, as Doug was showing the screen just a minute ago, it does have to be marked as e-file accepted, not just submitted. And again, as I mentioned, there is that handful of states where you might have to file more than one return. So just again, double check if your state is in one of those states, or as I said, the tricky part is in some of those states, again, New York, Pennsylvania, New Jersey, especially the New England-ish states, might ask you to file a return even if the club is not based there, just because of the membership. So this is the time of year. We've got a lot of questions coming in, so I want to talk a little bit about getting help for the taxes. So I do want to suggest if you go to the taxes tab, take a look the club tax help user guide that is in the taxes tab. There's a section there. Remember, this is one that I think Doug was talking about at the very beginning. A lot of tax and accounting professionals that don't necessarily have a lot of experience with investing partnerships. But between us, we've got an untold number of years. We've been doing this for more than 2 decades when it comes to working with the federal government and the various states to get all of these forms and cases and everything approved. So definitely take a look in our help files there. There's a couple places in addition to the help, the Taxpreneur Help Guide. I want to encourage you to check out the iclub.com/FAQ, including especially proud of this new one, the AI chatbot there that's available. Again, you go to the myiclub.com/AI/ask.aspx. It's also available. You'll see if you go to just the regular myiclub.com, there will be a little bar across the top you can click on. There's also, if you're in the myiclub.com itself, and I'll show you this in a minute, there's a little chat with support during business hours. You click on that, one of our folks will be at the other end. They can answer a lot of some of the quicker questions that you might have as you're going through things. You can also, as always, the most traditional methods, put in a support request. That's the myiclub.com/support.aspx. That'll give you a form. If you've used our if you've used the website before, you'll be familiar with filling that in. And also the very most traditional, the 87733 iClub. That's 9:30 a.m. to 6 p.m. Eastern, Monday through Friday. Also, I think this slide, the slide doesn't say so, but we do have extended hours to 9 o'clock on Thursday nights. You can give us a ring. This is a particularly busy time of year. I will say at the moment, I think my entire day tomorrow is just about spoken for. So certainly, if you've got a question and you're thinking about, well, maybe I'll just pop on over and give them a quick ring, I will say you're probably better right now. Send us a support request, and that's a good chance you'll get an answer without having to wait on the line for a while for someone there. So again, use one of those first couple options if you can. Telephone support if you need to, but again, this time of year, it may take a day sometimes for us to have an open spot to give you a ring back. As I said, there's the screenshot there of that get help right now. Again, during regular business hours, that will change from get help to a chat button. So that'll get you, again, someone online, and it'll look, well, something like this. You'll put in your name, your email, your subject, and again, one of the folks at the other end will do their best to answer the question through that little chat window there. This is also, I want to show off, this is our landing page for the help system here. So you can go to the help links, you can go to the investment club forum. That's particularly active the last few weeks. Seeing a lot of good folks asking questions and helping one another out there. So certainly that's a good option as well. And as always, you can get that myiclub.com/FAQ. In this case, we've taken a screenshot there. It's someone from the FAQ page, and then went down the left side and clicked that myiclub.com tax printer. And as you can see, the list of topics kind of scrolls off the bottom of the page there. So certainly a lot of information about filing the taxes available on that FAQ page. So Doug, we got anything else that I wanted to cover there?
Oddly enough, we do have plenty of people still in the house, but it is time to wrap it up. So I want to thank you, Sean. Thank you, Russell. Thank you, Treva. Thanks to all of you club treasurers for turning up for the event. We appreciate all that you do for your investment clubs, and hope to make this a painless year for you in generating your club tax returns for the IRS and for your state if you need to. We do appreciate it. Feel free to provide any comments or feedback, and always reach out to us with your questions. What we can do better to help your clubs thrive in this and any stock market. With all the best wishes for a happy 2026, I'm Doug Gerlach. Thanks again. We'll see you next time at our next Investment Club webinar.